You're listening to ChartingWealth.com for Wednesday, the 1st of July, 2015. We are looking at the two-day chart for IYY, which tracks the total stock market, all the stocks in the market. This is where the market ended up on the two-day chart. Those of you who are listening on audio, I'll explain to you where we are. We have three candles going down over the last 6 days. We're looking at two-day candlesticks. A medium-sized red candle on the 25th, and then on the 29th, a rather large candle, and then, of course, on the 30th, representing these 2 days, we have a large down candle also. Now, you might be saying, wait a minute, the market on Tuesday was actually up 0.33%. Now, that is not 33%. That is not even 3%. It's 1/3 of 1%. But we're talking about the market being down. Well, we're looking at a 2-day, not a 1-day candle. We have a large chart, then we have a smaller chart. We have a chart that gives us where the trend is and a chart that's more of an action chart. So what we have is a crossover going down on the 23rd of May and moving on, 23rd of June and moving on through that week. And we have had a hard down, a hard move in the market as Greece has run into problems. And we are still down. We have a 2-day trend line that we have drawn. We are well below that. And if we drop back, as I'm doing right here on the chart, I'll explain to it for the benefit of those listening on audio only. And again, you can always see our visual charts by just going to chartingwealth.com or following us on Facebook and Twitter. We post these every day, actually in the evening before the day of. And you can see the 2-day trend line. Our movement in the stock market is well below that. What happened today is the market opened. At a certain point, it moved higher in the morning and then rolled over and moved lower in the afternoon. Because it did not move as low as it opened, it actually is considered an up day, but you can see it continues to track down, down, down. The derivative oscillator lost a little bit of its length as far as its down move, but the MACD and the signal line are further apart than they were at the opening of the market. More of a divergence, not a convergence. The market is in a confirmed down move. And hopefully you got in when we talked about getting in a few days ago. If not, well, let's just continue. And again, if you got out because you didn't want to do an inverse trade, even better, wait for the market to settle out and then buy back cheaper. Now let's talk about SPY. And again, all the advice we give here is for those of you who are doing virtual trades. We do not give market advice. We're an education website. We're not a stock calling service. We don't take any liability for any trading that you do. We're teaching here. We're talking about virtual trades. Now let's look at SPY. SPY crossed over going down back on the 28th of May, going into June on the 2-day chart. And it is a confirmed strong down move over the last 2 candles in particular, the last 2-day candles. Stronger move down even today, a larger divergence. Again, SPY is the S&P 500. It's an ETF that tracks that. Excuse me. You can tell I've been talking a lot today. The 4-day chart, the 4-hour, the half-day chart shows us again confirmed strong down moves. SPY was up a little bit today, 0.21%, 1/5 of 1%. Again, same kind of thing. It opened up a little bit higher in the morning and did not close as low as it opened. So technically it was a little up for the day. Not much, but continued moves. You can draw a nice trend line if you're going to track the 4-hour chart going down. More divergence in the MACD, and it looks like the derivative oscillator even gained a little bit of steam going down. So again, still confirmed down moves well below the 2-day trend line on SPY. Hopefully you're either out of SPY or you're in an inverse. Now let's look at the Qs. What's the Qs? Well, the Qs is the NASDAQ 100. That's what it tracks. And same strong down movement. It crossed over going down back in early June between the 3rd and the 5th on the 2-day chart. Confirmed down moves, strong down moves of the last 2 candles, which is the last 4 days. Derivative oscillator heated up even more today. And the distance, the divergence between the MACD and signal line got even stronger. So strong down moves. If we look back at the 4-hour, the half-day chart, it shows both red candles moving down. Technically, the Qs was up 0.36% for the day. Now, let's talk about what's going on lastly with the gold, the commodity that we look at, the one that we look at. Gold was down 0.62% today, crossed over going down on the 2-day chart back between the 19th and the 23rd, continued to move down. If you follow the 2-day trend line that we drew back on the 23rd and the 25th candles, we actually today connected a 3rd candle to that. That is the candle for the 30th, the 2-day candle for the 30th. And so we have a confirmed down move with all of the movements below the 2-day trend line. We have the derivative oscillator getting stronger today. Looks like it might have flipped over on the 2-day candle on the 29th, but it appears that it got even stronger today. Like we said, crossed over between the 19th and 23rd. If we drop back and look at the 4-hour chart, we see that gold had ticked up. We talked about this yesterday. Gold started moving up. But what did it do? Well, it flipped right back over this morning, never broke our 2-day trend line, which would have been a potential trigger, at least make us pay a lot of attention that gold might be changing. It didn't. It moved on down. It was actually down today over 0.5%, 0.62%. We do see a doji at the end of the day. What is a doji? It's a candlestick pattern that means a great deal of uncertainty. Good news is that's only on the 4-hour chart. That may not mean anything. We did not cross going up on the 4-hour chart. I may have said 4-day just a minute ago. The 4-hour chart. We are still going down on the 4-hour chart and on the 2-day chart. So gold is in a confirmed down move also and did move down today. So that is where we are. Everything is down. The Greek contagion is interesting. What is going to happen, we don't know, but we're going to continue to watch the charts. Now, if some good news does happen over the weekend, we've got a big holiday going on in the U.S., and if the Greek voters vote to pay the money, which probably is not going to happen, it would be a huge boon to the market, I would suspect. Again, when you go into a long weekend like this with all these uncertainties, you are taking some risks with your money, either that things are going to get wonderfully better, some good news is going to come in, or things are going to get significantly worse. And again, if you're in down moves, maybe that's what you're hoping for. But let's follow the charts, not the noise. Thank you so much for listening. Again, follow us on Facebook and Twitter. If you aren't signed up for our newsletter at chartingwealth.com, you need to be. Thank you so much for listening. Wish you the best in trading and investing on Wednesday. New month, the 1st of July. Thank you so much. God bless. Wish you the best from chartingwealth.com.